Hello, good evening. Yes, today also we start a new chapter. This is a exam related revision, and this is beneficial for all the exam aspirants. First, I would like to tell you about the recording the laptop screen rather than to direct screen recording, right? And this is a paid version, and I have subscribed some premium questions, mock test questions from Infinity Educations, which is based on Egypt. I have this subscribe and this is premium subscription. That's why I cannot record the laptop screens, and I have to show separately on the mobile. And today we will revise the first section is section A. There are total 17 seven units, and out of that two sections section two sections are exam, which is mock test exam, and there are 100 questions, and out of 100 we need to score at least 80% to pass. And one section is essay sections, and the rest of uh, four section are practice, right? And I will start from the section A. This is first section. Okay. Now this is first section, and we have total 29 questions, and out of 29 we have to solve all the questions, right? Mm, let's start the questions. It's showing some issue. I hope this is visible, right? This is visible, I hope. Okay. Okay, now it's more visible. Okay. Now let's start. Question number 8. Now we are on question number 8. This is, I think this is not a correct option. No, we are going for corporate. Now we are revising financial statement analysis. This is the financial statement analysis questions. Okay, here are total 35 questions. We need to questions all. There is no time limit and 35 questions. Let's start. Okay, this is the questions. And in the financial statement analysis, the expressing all financial statement figure as a percentage of base your figure is called means we are calculating in the financial statement putting 1 year is base year and other are comparatively on the basis of percentage as compared to the base year, and it means this is either cross sectional analysis, vertical common sizing analysis, or matrix analysis, horizontal common size analysis. Which is the option? There are four options and simple as a we are taking base year and other all statement are calculating uh, on the comparing on the basis of base year and is simply horizontal analysis. In the common size statement, prepaid expenses would be generally expressed as percentage of which of the following. Prepaid expenses, percentage of which of the following. In common sizing statement, prepaid expenses means what? Prepaid expenses is a part of the balance sheet, right? And this is a current asset, current liability, current assets, right? Then it expressed as a percentage of which of the following: total cash outflow, total expenses, sales, total sales, and total asset. See, we need to understand here the prepaid expenses is either mm, asset or income. Prepaid expenses. Prepaid expenses is the current asset. That is why we need to calculate on the basis of total asset. Okay, this is a mathematical question. A financial analyst is reviewing a competitor's common income statement for the past 2 years. Here is given 2 years financial income statement of the competitors past 2 years and year one and year two. Mm, cost of goods sold and gross profit, selling expenses and general expenses of fresh operating income before income tax and tax related operations net income. The financial analyst is able to conclude that the competitors, this is the income statement on the basis of these are the options to be selected. What can I say? Income. This income has been increased at year one and year two, and sales has been increased year one to year two. Cost of goods sold has been increased. Gross profit has been increased. Selling expenses has been increased. General expenses has been increased. Operating income before income tax has been increase. Tax related to operations has been increased. Everything has been increased, right? Now, financial analysis able to conclude that the competitors common base income statement will show that gross profit increased by 70% in the year 2 as compared to year 1. Now, we need to calculate here. Option A is correct or not. How can we conclude the answer? Which answer is correct? Right? Now I'm saying here complete answer. Okay. See, this is the questions and see you can read here this option. How can you select? How can we select the right answer from here? It says that gross profit has been increased by 70%. To select either option A is correct or not, we need to just calculate the gross profit. How much increase? 115,000 minus 95,000, right? 20,000 divided by 95,000 means into 100 means 20% increase. 21% gross profit had increased. What is this is saying? The common base year income statement will show that the gross profit increased by 17% in year 2 as compared to year 1. This is not correct. It means this is not correct. We have to eliminate this first option. And common size income statement will show tax related to operation at 60% for the year 2. This is showing that this says that 60% 16% year 2 16% means 35% 3500 divided by operating income divided by 275. This is not correct. Option C, common size income statement will show operating income before income tax at 20%. Operating income year 2. Calculate operating income. We need to calculate operating income 25,000 divided by 275, right? Equal to in this is also not correct. Selling expenses increased by selling expenses. Let's see, 5,000 increase divided by 35,000 into 100%. This option is correct, right? Now question number 4. Company had sale in its first year of operation 345 3,450,000 and 4,576,000 in your second year. And salary expected expenses for the business was 568,000 in year 1 and 622.31 in year 2. Okay. People are not coming, I don't know why.